Broadly speaking, Islamic finance is based on principles of profit and loss risk sharing. So it's profit and loss, so it's actually based on principles of fairness, equitable principles, where a provider of finance, together with the customer, is actually going to share in either the profit or the loss, unlike conventional banking, where normally there is no profit loss sharing between a customer and the bank. So for example, instead of having bank deposits, what you have is investment schemes offered by the banks, Islamic banks, where the profit and losses arising from that investment are shared in a certain ratio between the financial institution providing the finance and the customer, whether it be a corporate or an individual who's actually on the other side of the transaction. The roots of the Islamic finance industry is really in the Middle East and the Far East, namely the countries of the Gulf Cooperation Council, which is the largest market is Saudi Arabia. Outside of the GCC we have Iran, Pakistan. In Asia we have, in Far East rather, we have Malaysia, and to some extent Indonesia. The industry is evolving and is moving from being a regional industry to becoming global. It is very well represented in the UK market, which is today the hub for the continental Europe. There are 5 Sharia-compliant Islamic banks in UK. In addition, there are in total 22 banks in the UK which are offering Sharia-compliant services. The UK assets are ranked as number 8 in terms of Sharia-compliant assets of about $18 billion, of which the largest portion is represented by HSBC Amana. Then you have other players like Arab Banking Corp, etc. I think the real challenge for the Islamic finance industry is to align itself for the non-Muslim community closer to ethical finance, or what is also known as socially responsible investing. And the qualities of Islamic finance rest on consumer fairness, on transparency, full disclosure to the investors or the clients. And in terms of Sukuk and Takaful is a relatively young industry. It started about, I would say, 5 to 7 years ago in terms of gaining momentum and critical mass. It has about $10 billion in assets in premiums today, annual, and it is growing at a fast clip of 25–30% per annum. The Sukuk industry is still a relatively small industry compared to the conventional bond market or fixed income, which runs into trillions of dollars. And the Sukuk industry is just over, I would say, $100 to $150 billion. The Sukuk issues in 2007 were in the order of $40 billion. And last year, due to the downturn, they were down to about $20 billion. But they are poised for recovery. The good thing about the Sukuk industry is that there is a huge amount of infrastructure development to take place in emerging markets. Namely in the Middle East, for example, the infrastructure development is mooted to be in the order of $1 trillion over the next 10 years. Some of that will be financed by Sukuk issues, and hence I think it's going to be quite exciting times going forward. The Sukuk industry, partly due to the announcement by a Sharia scholar in 2008 in terms of compliance with Sharia standards, had a small setback and is now recovering after the global downturn and some of the hiccups on Sukuk issues that we have seen in the Middle East, which have defaulted. So that, I think, is generally where we stand with Islamic finance. Islamic finance assets today are in the order of $1 trillion in total, and the largest amount of those assets come from commercial banks, and then the next one is investment banks. And then comes Sukuk issues and the Takaful and asset management industry. The asset management industry in Islamic finance has also been growing. We have in the order of something like 700 mutual funds with assets of about $30 billion, and that is also expanding relatively fast. And we have a number of indices today, from Dow Jones Islamic Market Index, the FTSE Islamic Market Index, the S&P, and other providers of indices have now arrived in the market, so it's good for benchmarking, etc. A sukuk is basically an alternative to the conventional bond. It's more of an asset-backed or asset-based product, which means that the instrument of financing has to be backed by tangible assets. So the assets must be tangible. They cannot be a form of a derivative as such. So tangible assets could be shipping assets, it could be aviation assets, it could be a fleet of motor car rental pool, for example, etc. You could have sukuks for home financing as well. And the UK market has £500 million sterling of Islamic mortgages today.